Prateek Aggarwal, the CFO. Gentlemen, good morning. Thank you for joining us. I just want to start first with you, Vijay. Strong growth in Q3 as part of the organic piece. Could you tell us how much was led by ramp-up of large deals like Nokia, and also what contribution has actually come because of H&D acquisition?
I think it's been an outstanding quarter for us, 5.6% constant currency growth quarter on quarter and 13% on a year-on-year basis. And what is very impressive is the growth is across all geographies, like US, Europe and rest of the world, excluding India, delivered a double-digit growth. US did 13%, Europe did 14%, rest of the world, excluding India, did 12%. Our Mode 2 services demonstrated significant acceleration, 13.3% quarter-on-quarter growth. And if you look at all the verticals, right, whether it is telecom or technology and services, retail CPG, life sciences and healthcare, all of them delivered 20% plus year-on-year growth. And financial services, while across the board we see good momentum, due to a couple of client-specific issues, we have a muted growth in financial services. Manufacturing also delivered a good quarter-on-quarter growth. So it's an across-the-board momentum, and this is reflecting some of the bookings that we did in the past quarters, that a lot of deals are coming into execution. And specific to client-specific numbers, I would not like to comment on, but you will see that the growth is across the board. So one client could be in one geography, but the growth is much more broad-based. And in terms of acquisitions, on a constant currency basis, about 120 million that we added, 90 million has come from organic, and the remaining would be either due to consolidation of H&D, which is probably 22 million, and a little bit of full quarter impact of Actian.
Prateek, give us some sense of how much digital makes up, and digital as a vertical, how much is that contributing?
We don't call out a separate digital number per se, but for more than 2 years now, we've been focusing on mode 1, 2 and 3. Digital is actually included in all three to some degree or other. The mode 2 is 100% digital, but then there is automation and hybrid cloud and private cloud sitting in the mode 1 as well. And then in the mode 3 also you have some products which have SaaS versions and so on and so forth. So if I was to just look at the mode 2 itself, which has grown a 13% plus quarter on quarter, that is the most heartening growth that we can take as a surrogate for the digital question that you were asking me.
Right. Vijay, talking about your service areas, that's IMS and engineering and R&D, both fired up this time. Q4, you think, will also be similarly strong? And vertical-wise, do you expect BFS softness to extend into Q4 as well, owing to the specific client issues, despite good demand?
Our financial services is doing well across the board in all the geographies. And we had called out a couple of client-specific large clients where there is some softness, and that continued into this quarter as well. Outside that, financial services is doing well across the board.
Right. Prateek, what progress are we seeing on your mode 1, 2, 3 strategy?
I think we are very focused on maintaining a good balance between growth as well as margins. We have, over a long period of time, if you look at even 8 to 10 quarters, we have been in that narrow range of 19.5 to 20.5, which is what our guidance for the year is, and which is where we continue to remain with our expectation as well. I think more important than just that number which gets beaten to death are some of the new metrics that I have talked about in my quote this time around, which is return on equity of 25% on a calendar year 18, the last 12 months basis. And the other one is the return on invested capital, which is close to 29%. And those are very healthy return to the shareholders. The third number I would like to talk about is cash EPS, which is nothing but earning per share adding back the non-cash items and reducing the MAT, the minimum alternate tax that we pay, which is more than the tax cost, if we do that metric, we are at 82 rupees per share, much higher than the gap EPS that you see, which is more like 76 or thereabouts. The 82 rupees is significantly higher, and that is where we continue to focus on generating a good cash EPS for our shareholders.
Right. CVK, hope is pinned on integration of IBM products to fuel growth from the second quarter of FY20. How do you see it contributing in the year, and over what period will it be amortized?
Yeah, I think we announced the acquisition on 7th of December, and it's still not closed. We said it is going to close in the middle of the year. So June, July is when we should expect it to close. After we close, the revenues will start flowing in. The first year revenue, we had indicated it is $625 million. Second year will be $650 million. I think we are pretty much on track, but to quantify the exact impact in FY20, it really depends on when it will formally close. So I don't want to take a guess on that. It's approximately in the middle of the year. And on the amortization, maybe Prateek can provide a perspective.
Yeah, so we are working on the amortization. I don't have a very definitive answer for you right now, but it's still going to, it's like any other Mode 3 business that we currently run. It would still be in that ballpark of, let's say, 23 to 25% EBIT, hopefully better than that.
And Prateek, for 9 months, you're at the lower end of your guided margin band. Do you see improvement towards the top end, or rising costs of doing business in overseas markets and retreating currency tailwinds will keep it under check?
We are part of the industry. We are going through the same movements that you talked about. And I think margins is, we are continuing to be in that 19.5 to 20%. And we would keep making our efforts to stay there. If anything changes, we'll kind of reflect it in our guidance going forward, which will come back to you next quarter.
All right, gentlemen, appreciate your time. Thank you for joining us.